Welcome everyone to our second webinar of 2021. Today we're going to be focusing on the self-storage industry and financing options through Liberty SBF, focused on SBA, conventional, and bridge. Lon, if you want to kick it to the next slide. My name is Alex Cohen. I'm one of the principals here at Liberty SBF. I'm going to be kicking things off today. Joined with me on the webinar is Alex Prombaum, another one of our principals and our director of credit, as well as Warren Rockra, our business development manager, and Kevin O'Shea, another senior member of our credit team. Just in terms of a quick overview of the agenda, I'm going to be kicking things off. I'm going to talk a little bit about our company and some of the value propositions that we provide to participants in the self-storage industry, as well as our core products. Alex Prombaum is going to walk through a couple of deal examples, recently closed deals within the self-storage industry, and some of the nuances for why those were a good fit for Liberty SBF, how we structured those deals, and ultimately how we got them closed. Warren's going to walk through how to initiate sales coverage here at Liberty, and give you just a quick high-level overview of the life of a loan in terms of getting a quote, getting a commitment, and then the process from deposit to close. Kevin's really going to be digging down a little bit more into what is required at each of those stages and try to give an overview so that our brokers and referral sources can provide us with the information that we need in order to provide a quick quote, an efficient execution to a commitment, and then ultimately how to get your loan underwritten and closed within 30 to 45 days. So let me get started. Just a quick overview of Liberty SBF, founded in 2011, coming out of the last recession and during the last recovery cycle. In the last 10 years, we've closed over $2 billion in transactions. We've been very busy during this last disruption to the business cycle as a result of COVID. And despite the fact that other lenders have pulled out, we've been very active, and just in the trailing 12 months, we've closed over $1 billion in loans, a combination of PPP, SBA, conventional, and bridge. We focus on lending across the country, a national footprint, and on loan sizes between 500,000 and 15 million, although within the real estate practice, we tend to focus on deals between 1.5 or 2 million up to 15 million. And then we have some working capital solutions where we can lend down to about $500,000. In terms of our team, we have a team that's been working together for 10 years. Our core team comes out of the institutional lending and securitization industry. So we've got a deep bench when it comes to underwriting and originations, as well as closing and servicing. And like I said, come out of while many of the core members of the team come out of that institutional lending space, for the last 10 years we've been working together in the smaller balance sphere. Like I said, between 500,000 and 15 million. Lon, if you want to kick it to the next slide, please. Thank you. I'm going to talk a little bit about the value propositions, as it relates to working with Liberty SBF and really what we can offer to to professionals who are working within the self-storage industry, either owners or, primarily for this presentation, our referral source community, both brokers and lenders who are sending us transactions. Alon, if you want to kick it to the next slide. So one of the things that I really want to highlight on today's presentation is some of the updates to our lending programs as it relates to core lending and as it relates to the self-storage industry specifically. So one of the big things we're going to be talking about today and talking about, into the future here, and we will be attending ISS and we will be attending SSA. So my hope is that we'll be able to see some of you folks in person here next week. And if you're not attending ISS in Vegas, then we'll hopefully be able to see you at SSA in the fall. But one of the big things you're going to hear from myself, you're going to hear from Warren, you're going to hear from BDOs that you're talking to, is the expansion of our lending products to focus more on business plans, CapEx, construction, versus what we were doing pre-crisis, pre-COVID. So I think the number one value proposition that we bring to the self-storage community is that we're able to offer construction and bridge financing to borrowers and through their brokers for deals under 10 million, both, SBA and conventionally. Our ground up construction program is really more focused on SBA, but we do offer a breadth of solutions, both for ground up, transitional, bridge type business plans, and then both SBA and conventional executions for stabilized assets, which brings me to point number 2, which is that as a platform, we offer high leverage, low cost financing for borrowers. And, that is through both our SBA and conventional executions. Many banks, particularly larger banks across the country, tend to focus on A credits, deals with stabilized cash flows, historical cash flows, 2-3 years with debt service coverage. I think what you'll find about our platform is that we tend to have a little bit more flexibility in terms of underwriting business cash flows. Obviously, we're predicating on that, the fact that there's a sponsor, a good sponsor with good experience, who's bringing that wherewithal to the table. If it is a deal where there might be some challenge to business cash flow, we're going to be looking for some other mitigants to help support the deal. But Liberty is not an A+ lender. We focus on credits that may be in transition and credits that may have, hit some bumps in the road along the way. But if it's a deal that makes sense, we can typically get our head around it, structure around it, and get a deal done and offer high leverage and low cost at the same time. And I think some of the deals that Alex will walk through will demonstrate that. We are able to offer both commercial real estate financing and working capital solutions, primarily working capital solutions through the 7A program. We are not a 7A lender approved by the SBA, but we have many relationships within the SBA realm that we work with very closely to provide 7A working capital solutions in conjunction with our own balance sheet commercial real estate transactions. And a lot of folks out there will tell you that they have 7A solutions for you as an intermediary, but we have a stable of lenders that we have worked with very closely over the last 10 years, doing hundreds of millions of dollars in business that we can rely on. And we have, in many instances, combined our own real estate capital solutions with one of our 7A lending partners, and being able to offer both working capital in conjunction with the CRE transaction. Fourth, very important, although it's not something we're going to dig into today, but it's certainly something I would invite everyone to reach out to Warren about, is the fact that our referral sources can earn additional incentive fees directly from Liberty SBF, the lender. The best way to learn about those incentive fees, and I'll just outline very quickly that there's 3 ways to earn incentive. One is incentive on a particular transaction. Liberty SBF, across its product set, is able to offer premium to brokers or referral sources for sending us deals that close and fund. Number 2, we're able to offer volume incentives for individual brokers within an account who hit certain high watermarks, typically 10 and 20 million. And then we are also able to offer account-based incentive programs for high volume accounts, all of which we'd love to discuss with you through our sales organization. And those are discussions that you can kick off by contacting Warren Rockroad directly. Lon, if you wouldn't mind moving to the next slide, please. I'm going to quickly highlight the product set that we offer to the self-storage solution. Alex Kronbaum, as I mentioned, is going to be walking through a couple of deal examples. We won't be able to talk about an example of every type of loan that we offer, you know, just because it would take too long. But we are happy to talk about historical execution for the products that we provide. And I'm just going to walk you through the products specifically that we offer to the self-storage industry. Juan, if you could just kick it to the next slide, please. So interestingly enough, self-storage is one of the unique asset classes that is eligible for financing through all of our lending executions. And I just want to highlight the different loan types that we offer to the self-storage industry. So first and foremost is SBA. Our primary product within SBA is the SBA 504 loan. We're able to offer self-storage borrowers between 80 and 85% financing, ground up construction, CapEx, stabilized properties across the board through the SBA 504 program. Personally and across our organization, for borrowers who qualify, the 504 program is an excellent execution, and self-storage is one of the assets that qualifies for SBA financing. Given the high leverage and the low cost, it is certainly one of the options that I would be thinking about. And you know, Liberty SBF can offer a very efficient and fast execution because we're specialists in the 504 loan program. A lot of banks, a lot of lenders out there offer a lot of different types of solutions and may do a few 504s here and there. Liberty SBF is an expert in that program. We've been doing 504 loans for the last 10, 15 years, and we have great relationships with the SBA, with the CDCs in all the states that we operate in, which is pretty much every state. And we can be a great value add, a great partner for your SBA and SBA 504 needs. So SBA 504 for real estate equipment is a great option. As I mentioned, we can bring a 7A execution to the table as well. So if a transaction is presented to us that requires financing for both real estate and working capital, that is something that we can put together in a holistic solution for you with one of our tried and true partners. And that winds up being a great offering to our referral sources and our borrowers. The second product I want to mention is our conventional loan. We offer a fixed rate permanent loan solution on a conventional basis for self-storage. We're able to go between 65 and 75% LTV on that product. LTV considerations are loan by loan, and typically based on business plan and stabilization, as well as the net worth and liquidity and experience of the operator. But we do have a non-SBA, non-government, conventional PERM loan execution for self-storage borrowers. We also offer a bridge loan execution, which is conventional. It's non-SBA, and that is typically for 1 to 3 year business plans. We do not do ground up construction utilizing our bridge loan, but we can offer up to 50% of the bridge uses, can be used for construction. So this loan can be used to for refinances, to clean things up, do partner buyouts, execute certain business plans associated with a refi. They can also be used for acquisitions and repositionings of properties, especially repositioning business plans that require a significant amount of CapEx. Across the board, we offer construction solutions for the self-storage industry. As I mentioned earlier, SBA 504, we're entertaining ground up construction projects. For our bridge program, we're able to offer up to 50% of the uses are eligible for construction uses. So, you know, between SBA and bridge, we're able to offer ground up and heavy CapEx business plan borrowers financing solutions, both conventional and SBA. I'm going to kick it over to Alex Kronbaum. He's going to talk about a couple of live deal examples that were recently funded and walk you through some of the key aspects of those deals. Alex, take it away.
Hi, everybody. How you doing? I'm Alex Kronbaum. I'd like to talk to you about some examples of self-storage loans that loans on self-storage properties that we've closed in the past. What I want to be able to convey through these examples is that there really is a pretty wide range of types of loans we can do. And so, I chose two kind of on the opposite ends of the spectrum. And, I hope, be able to convey that. So Lon, why don't you go to the next slide? So the first loan is an SBA 504 PERM loan that we closed as a refinance on a property in Panama City, Florida. This was a pretty bread and butter, straightforward loan. This was a property that the sponsors bought with a CMBS loan 10 years prior. It was a rate and term maturity. The sponsors were deciding whether or not they wanted to sell the property because they were getting some pretty good offers, or take out an SBA 504 loan because they could get some cash out with the high LTV. Pretty late in the game, they ultimately decided to go SBA 504. And we had to meet a pretty tight closing deadline. I think it was just under 2 months that we had to meet for this property. We were able to do so. We were able to get them a full SBA 504 approval. We were able to pay off their CMBS lender. We were able to get them cash out. And it was a very clean execution. I would say either an acquisition or refinance where the borrower would be electing to go SBA 504 because of the high LTV. And with SBA 504 in general, you should always just be thinking this is the highest LTV loan in the market. That's what borrowers use it for, amongst other things. But on a just straight acquisition or refinance, SBA 504 is going to get you the most proceeds, and on a refinance, cash out. This is an example also of an SBA 504 loan, but it's different because it was a pretty heavy lift construction loan. It wasn't ground up construction. It was a conversion of an industrial property, but it represents how you can use the SBA 504 structure to get maximum proceeds, and self-storage assets are eligible for that program. So this is a property in West Chicago, an old industrial property that the sponsors were buying and converting it into climate-controlled, cube-smart self-storage. We were able to get, prior to closing, an SBA approval for an 80% loan-to-cost loan. Now, an SBA is pretty liberal with their definition of cost. It includes obviously the cost of the property, the cost of the construction, but it also includes any additional fees and expenses associated with the construction process, as well as an interest reserved for the construction period. So you're able to bundle all of those items into cost and get a full 80% loan-to-cost loan on SBA 504 self-storage construction loans. That's what we did for this property. We were able to get the borrower maximum proceeds of 80% loan-to-cost. And we were able to capitalize all of the interest during the construction period into their loan, all the fees, origination fees associated with the loan, into the total cost of the project. And we were able to do this for a sponsor who was not a seasoned self-storage investor. They were a seasoned real estate investor. They had strong net worth and liquidity, but this was their first self-storage transaction. This was their first self-storage conversion transaction. So this represented a much larger lift, a much larger business plan, and it required a certain amount of pro forma underwriting, because they wouldn't be able to start leasing it up until the construction was complete and they got certificate of occupancy. And we were able to execute for this borrower with an SBA 504 structure. And it's one of the unique uses of this loan is that since self-storage straddles between investment real estate and what the SBA considers owner-occupied real estate, you're able to execute business plans like this, which really represent, resemble an investment real estate business plan, and get the advantages of the high leverage of SBA. So those are two examples of some of the loans we've done. Very simple, more complex. We were able to run the full gambit, and we'd love to, obviously do loans with you in the future, anywhere along that spectrum. So with that, I'd like to kick it over to Warren Rockra, who runs sales at Liberty, and talk to you about how you do submit a loan here at Liberty.
And before Warren jumps in, sorry, Warren, to hijack here, I think it's a good transition point, though, to mention that obviously we talked about some of the different types of loans we can structure using a 504 facility, but really the best way to understand how we're thinking about credit and how we can offer solutions to our borrowers through our intermediary community brokers is, send us a deal. Even if it's early stage, we can give you some ideas on how to think about it. I can tell you that there are many, many instances where we work very closely with a broker who wasn't even thinking about particular structure or ways of financing a transaction. And one of the things that we try to pride ourselves on is being able to provide that value add in thinking about solutions, whether that's using a 504 in a circumstance you may not have thought about it, or structuring a bridge deal in a certain way, or structuring a PERM financing in a certain way. Even if it's early stage, we recommend you jump on the phone with us. We may be able to offer some insights that maybe you weren't even thinking about, and together we can work on putting together a financing package that makes the most sense. Sorry, Warren, kick it back over to you. Thanks.
No worries, thank you. All right, everybody. My name is Warren Rocker. I run the sales team here at Liberty SBF. Real quickly, I will be going over how to submit a deal, how to initiate sales coverage, kind of working through the life cycle of a loan through Liberty, from issuing a quote out to getting an app in to deposit to closing the deal. With that said, Lon, can you please move to the next slide? Perfect. So here is our process, high level, of how to get a commitment 4 days or less. The very first thing you want to do is contact me by email, vrocker@libertysbf. What I will do then is assign you sales coverage, whoever's nearest to you or better suited to your vertical specialties. And from there, the BDO alongside me will work on your request. You will then present the loan request, very high level. We may have a few questions. My partner, Kevin O'Shea, will be going in more in depth on those questions and some of the nuances we need in order to start your underwriting of your loan application. But once you present the loan request, we will give you out a quote, an initial quote, within the first 24 hours. If you accept the quote and you want to keep continuing your loan application with us, we will then give you our loan application, a due diligence item list, which once again, Kevin O'Shea will be going over, to issue a commitment letter, which is our term letter, out within 2 business days. Once we get our term letter out to you, you get it signed, we collect the deposit. We usually be closing your deal within 30, 45 days by ordering some third-party reports, finishing our credit memo, and then obviously just the closing of the loan. And that's about it. Honestly, it's a very simple process. We have a very streamlined process. We have eyes on our deals every day, and we work very closely alongside credit and our head of credit as well. With that said, I'd like to kick it over to Kevin to go over more into details of our questionnaire and what we need to submit a loan application.
Yeah, thanks, Warren. And hi, everyone. My name is Kevin O'Shea. I'll be walking through our loan making process in a little more detail, from issuing a quote to issuing a commitment, underwriting the loan, and closing and funding it. Before I get into the details of our process, I do just want to touch base on how we look at self-storage deals here at Liberty. We focus on 3 key areas and evaluate the strengths and weaknesses of each area. So number 1 is property. Number 2 is borrower and sponsorship. And number 3 is business plan. So when we're looking at a property, we're looking at the asset's location and its quality. We're looking at its historical cash flow and how that's changed over time, as well as its occupancy. Number 2, we're looking at borrower sponsor strength. So we're looking to see if the borrower sponsor has experience owning and operating self-storage facilities, and if they have experience operating within the market of the subject property. We're also looking at their financial conditions, so net worth and liquidity, as well as if they bring any outside income from other sources. And then number 3, we're looking at the business plan. So what exactly is the business plan? Is this going to be a straight acquisition or refi? Is there going to be some sort of renovations completed to raise rents or increase occupancy? Or is this going to be more of a heavy lift, ground up construction type deal? And does the sponsor have experience executing on those business plans in the past? We're going to be weighing the strengths and weaknesses of all those three areas when we evaluate a deal. And I'll now go into a little more details on what we need to get started. Lon, if you want to go to the next slide. So before issuing a quote, we want to understand the transaction, again, focusing on those three key areas. So, number one, how has the subject facility performed historically? And is it currently stabilized? We're looking at cash flow and occupancy primarily there. And is the facility currently stabilized, or is it maybe under market rent or under market occupancy due to some sort of short-term market forces within the submarket or at the property itself? Number two, what is the borrower sponsor's experience owning and operating a self-storage facility? How many facilities have they owned and operated in the past? Do they own any properties in the current market? Are they experienced commercial real estate investor in general? Number three, what is the borrower's construction or business plan? How long will it take to complete that plan? So again, is this going to be a short-term renovation business plan, or is this going to be more of a heavy lift construction type deal? And what does that timeline look like to complete the proposed project? And finally, does the borrower have experience completing that business plan? Have they successfully executed similar projects in the past and within the market? Once we understand the transaction, you can contact Warren and he'll work on getting you a quote. Lon, if you want to go to the next slide, I'll talk a little more in detail on what documentation we need to be able to issue a commitment letter. Next slide. So again, we're collecting documentation to understand those key areas. So, to start, transaction information. Is this going to be a purchase or a refi? If it's a purchase, we'll need the executed contract. If it's a refi, the original promissory note, so we understand the terms of the loan we're going to take out. And if there's going to be CapEx involved, whether that is a light lift renovation or a heavy lift ground up, we'll need an itemized budget and a timeline to go along with that. And we'll need the contractor's resume that's going to be completing the project. We'll want to sort of evaluate what the total cost and timeline is to complete the project, and if the contractor is the right fit to execute that. Next, we'll look at property financials. So 3 years and year-to-date income statement, as well as, excuse me, a current rent roll. Here we're going to be looking to evaluate cash flow at the property, but we can get flexible if other areas of the deal can provide strength and support maybe a weaker property performance. And then a rent roll, obviously, to evaluate occupancy over time. Next, we'll get principal information. Here we'll collect 3 years of personal tax returns and a personal financial statement. Again, we want to evaluate the principal's outside income, if he brings any cash flow from other sources to support DSCR on the deal. And from a personal financial statement perspective, we're looking at the borrower's net worth and liquidity. We generally look for post-injection liquidity of 5 to 10% of the loan amount and a net worth about equal to the loan amount. Once we get these documents, we can issue a commitment letter to you and look forward to move the loan into underwriting. Lon, if you want to go to the next slide. Prior to issuing that commitment letter, we've already requested, 80% of the documentation we're going to need to underwrite and close your loan. So really, once we get a signed commitment letter in and a deposit, we're going to go ahead and order third-party reports during our underwriting process. Liberty will partner with nationally recognized vendors to procure these reports. We'll get the standard commercial real estate reports, so that's appraisal, environmental phase 1, and a property condition assessment. If the loan or project has any CapEx involved, we will partner with a third-party engineering firm to get additional reports, which will generally include a document and cost review and a contractor evaluation. These reports will evaluate the budget of the project and the contractor's experience to see if the project's budget and timeline is reasonable, and if the contractor is the right shop to complete the project. For a heavier lift ground up construction deal, we'll also get a feasibility study, which will evaluate supply and demand in the market currently and in the future, projected out with the completion of the subject facility coming online and any other facilities in the market. And it will basically confirm that the project is feasible given those projected market rents and occupancy rates. Again, for a more heavy lift construction deal, we'll also partner with the same firm to provide ongoing construction progress monitoring and draw control post-close. So that involves on-site visits at the property once a month, to make sure that the project is getting completed as it should, and draw control to collect the requisite documents that Liberty needs to disperse funds on an ongoing basis. Once we get satisfactory reports in, it takes us about a week to get credit approval. And then after credit approval, about 1 to 2 weeks to close your loan.
Excellent. Thanks, Kevin. We're gonna take some questions. Before we do, if there are any, you guys have done an amazing job and we're very comprehensive here. So
there is one question.
We may or may not get a slew of questions here, but just as a quick reminder, we're going to be at ISS next week. We're sponsoring. We'll have an exhibit booth. I will be there with 3 other folks from our team. I know some of us have already spoken about setting up meetings, but please reach out if you'll be at ISS and you have some time to meet. We'd love to talk more about our programs and talk about any deals you might want us to take a look at. In addition to ISS, we're also going to be sponsoring SSA, and we'll be attending SSA in the fall. Obviously, a little bit of a ways out, but just a quick reminder, we are going to be sending out next week for external distribution. We're putting the final compliance and legal touches here on our July 2021 Q3 rate sheet, which includes rates and indications of rates and some information about earning premium, and those will be available starting on Monday. So we're going to be dropping new pricing in advance of ISS. We'll be attending ISS and exhibiting there. Please reach out if you have any deals you'd like us to take a look at. We're happy to take a look even before ISS. And certainly if you're going to be attending ISS, please feel free to reach out to Warren, and we'll set up a time to meet, and looking forward to doing that. Alex P., it sounds like we have a question.
We have actually 2 questions. The first question came from Brent Morris. I'm pronouncing your name. I hope I'm right. Can you please define DSCR that Kevin mentioned? DSCR stands for debt service coverage ratio. It's a standard lender matrix which just takes the NOI of the property divided by the debt payment. So a DSCR of 1.2 means that the property is making 120% of its monthly or annual payment in NOI, showing that it's producing sufficient cash flow to justify the loan request. In conversion deals or ground up construction deals, there will be no business DSCR because the property isn't producing cash flow yet. But we can find other ways to work around that and get those loans approved and fund those loans in different scenarios. So I hope that answers that. We have a second question from Scott Barnes. Said you mentioned deposit requirements upon loan commitment. Can you speak to those real quickly? Be happy to, Scott. We require a $15,000 deposit upon the signing of a loan commitment letter. Those expenses, all but $1,500 of those expenses, are purely for hard costs associated with underwriting and closing the loan, majorly third-party reports and closing expenses related to loan documents. The majority of those are financeable into the transaction. So That is a deposit to cover out-of-pocket lender expenses in the underwriting and closing of the loan. It's refundable in so much as something happens during the transaction, there's some remaining. And that is our deposit on loan commitment.
One other point I would mention on deposits is that in addition to them being primarily for hard costs, we only charge a $1,500 non-refundable fee. The majority of those costs are financeable, as Alex Cromwell mentioned, and we can advance against that cost in terms of the final loan amount. Second, is that we can provide periodic updates in terms of a loan and in terms of a deposit reconciliation report. So if you want to understand during the course of the deal how much money has been spent and what it's been spent on, that's something that we can always provide. And then I would say most importantly, we typically will spend money on third-party reports up front, but we will reserve legal costs until the deal has been approved internally in terms of final credit committee, so that we're not incurring legal costs. Now, if it is a super time-sensitive transaction, we obviously have the ability to start legal a little bit earlier on. We tend to like to wait until we have full commitment because we don't want to spend borrowers' dollars unnecessarily. But we are very cognizant of that cost. We try to incur costs that are needed and only those costs that are needed, and spread costs out until a point of time where we know that there's a firm commitment to close in terms of final credit committee, in terms of getting the information back from those third-party reports.
That's it, Alex, for questions.
All right, excellent. Well, obviously, if other questions come up, please feel free to email Warren Rockra. We're happy to set up a group call in terms of any accounts or offices or branches that would benefit from receiving a presentation or a Q&A type session with myself or Warren or our sales team. We look forward to seeing everyone at ISS and later on in the year at SSA. We will have a copy of this PowerPoint presentation available early next week, in addition to our new pricing, all of which will be dropping before ISS. And we look forward to seeing you in Vegas. Thanks, everyone. Have a great day.